Equity markets have been moving from strength to strength, this despite the not so good news coming in from Budget 2024 with respect to taxation. What's the outlook for the way forward, and what are the sectors that look interesting? I have with me Harsha Upadhyaya, the Chief Investment Officer for Equities with Kotak Mahindra Asset Management Company Limited. Hi Harsha, and let's start off this conversation with the tax tweaks that have come in for equities. I suppose this could be seen as coming because equities as an asset class are still relatively more favorably taxed compared to other asset classes. What's your view?
Yes and no, I would say. Some market participants did expect some increase in STT and some changes in long-term capital gains. But yes, a large section of investors may have been disappointed at the time of announcement. However, when you look at it, there has been a rationalization of tax rates, and also even today, equities have one of the a better taxation structure, I would say. To that extent, I mean, we can't avoid taxes. Whatever is the rule of the law, land, we'll have to accept that. Yes, from here on, I think people will probably take that into their consideration and build in their expected rate of returns. So overall, I would say it's not going to impact long-term investors because there has been a marginal increase in long-term capital gains tax rate, and most investors would probably take that into account and build in a little bit of higher expected returns. But yes, for short-term traders and those who do not keep their holdings beyond 12 months, for them impact would be higher. One, there has been a significant increase in short-term capital gains tax, and also there has been increase in STT, securities transaction tax on futures and options, which could be detrimental to trading profits for those short-term traders.
I'd like to talk about the consumption sector because even in the budget, there were two areas that were sort of given a lot of focus. One is job creation and the other is the rural economy. There was a higher allocation over there. Do you think that these are necessary to remove any impediments to a revival in the consumption sector, especially the mass consumption bit?
May not be just because of the budget proposals, because whatever gains have come, those have come from the taxation structure changes, especially for salaried individuals, which I would say would benefit more of urban and semi-urban, lower to middle income bracket. So I'm not sure whether it will directly impact consumption, but some of the proposals that have been there in the budget, and which is also kind of something which will continue over the next few years, are all focused towards more job creation and also sustainability of that growth, especially in the manufacturing segment, which means that slowly and steadily that should lead to more income generation in the economy, and hence consumption should steadily come back. And more than that, I think the monsoon progress has been very, very encouraging. While it started on a very low key in the month of June, when you look at July, more of that deficit has already been kind of bridged. And as we speak, there is an about 3% over a normal range in terms of the overall rainfall. And also when you look at the temporal distribution, it's been better than the previous 5 years. So hopefully all of these factors in combination should help rural sector to come back in terms of consumption.
Let's talk about the IT sector because we've seen the top three companies deliver their first quarter numbers for the fiscal year 2025, and they're pretty good. What is your take on this sector?
First of all, to begin with, the IT sector expectations were very low in this particular quarter, given what had happened in the previous couple of quarters. Compared to those muted expectations, the delivery has been stronger, and also the guidance points to a fact that probably there is some bit of an business momentum that's coming back, especially in BFSI segment for IT services in India. The margin should also hold up quite decently from here on. So we believe that probably given where the valuations are for the entire market, which is definitely more elevated than where we were earlier, probably some incremental money will move into IT in the hope of recovery in terms of business momentum, as well as a kind of a hiding space in case there is volatility in the market. These companies which are not really leveraged will probably do better than the rest of the market. So that defensive tilt could also help more money going into IT segments. Broadly, we do believe that there are some green shoots in the BFSI segment for IT services. And hopefully over the next few quarters, that should strengthen.
So IT essentially will be the flavor of the season. And finally, a lot of our equity mutual fund holders are watching you. What would be your recommendation and advice to them?
I think it's again the same thing, that keep a long-term focus, make staggered investments. Currently, the market is showing a very, very large momentum. Please don't chase momentum. Keep quality over momentum and build your portfolio from a long-term focus with disciplined investments, and keep asset allocation in proper shape at all points of time. I would say these are the mantras for any long-term investor.
Sage advice as always. Thank you so much, Harsha, for joining us.
Thank you.
Don't chase momentum, stay disciplined and stick to your asset allocation path. That's the word of advice from Harsha. Thank you so much for watching. Stay tuned to Kotak Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.